Okay, welcome into my InvestEngine portfolio update. Now for the month of July. We are more than halfway through the year now. And yet again, these are getting kind of boring in a way because we know what to expect now. Yet again, the stock market has hit another all-time high. This seems to be like a reoccurring theme now every single month. And you would never have guessed it as we started the year back in January. And of course, later on toward the end of 2023, when the bull market had seemingly already run and we expected things to go down. But yet again, another month of all-time highs in the stock market. And as we'll see in a moment, my portfolio is also looking very healthy too. And that's not only just because of the gains that you will see in the account now, but it's also because I'll regularly invest into it. And that's one of the key themes that I'm going to be talking about in today's video. Okay, so I'll just put my portfolio up on screen now so we can all have a look. And you can see a very healthy balance now at £41,422. That's mainly across my stocks and shares ISA account that I've got here on InvestEngine, but also a small self-invested personal pension. Now, a couple of key things, and one thing that was pointed out last month, which is quite useful actually to know, that you will see two numbers here when you look at your portfolio. For example, let me just go into my ISA portfolio now. As you can see, it will say a 24% gain, but only plus £4,000. Now, 24% of £40,000 is a lot more than £4,000. That's because the two numbers are shown and calculated in different ways. The pound difference is purely the pounds difference in what you put in and what you end up with. But the percentage is based on a time-weighted return. If you actually just press on the information tab here, you can see what that actually means right at the bottom here. And this is useful because I guess as you contribute to the portfolio and as that money hasn't had much time to actually grow and do anything, it doesn't want to necessarily affect your percentages of what you see in your account. Now, many different brokers will do different ways of calculating these things, but just an interesting one to know, certainly in case you get carried away or think how are they calculating that, or this must be some kind of weird fake returns or something like that. Anyway, now with that one out of the way, I think this month more than any is another reminder that we just cannot time the market. And there will be many people out there who will have cash on the side, or they'll be in money market funds, or they would have made the decision to not be invested over the past couple of years because they thought the market was overvalued or just too high. And in my personal view, that is a very dangerous game to play, to pretend that you can somehow time the market and know when the stocks are overvalued or undervalued, etc. I'm not really sure how many times that people will have to keep going on about this, that you can't time the market, but I can almost guarantee that people will continue to time the market no matter what. Now, one of the ways I kind of get around this as an investor is, as you can see on the kind of all-time price chart now, all of these little black dots is when I invest into the portfolio. The green line is the value of the investments and the blue lines is what I've actually contributed to the entire account. You can see I can turn those on and off so you can see what the contributions actually do to the account. Now, if I just look over the last 6 months, I think this has been an interesting time in the stock market. Many of you will know that the way I invest is I will invest every single month automatically into the account no matter what. And I think this really helps to kind of put that into the back of your mind, whether you think the market is expensive or not, or whatever you think about the market. Personally, I will just invest exactly the same way. And that's for several reasons, really. One is to take all of the emotions out of investing itself and to make sure that as a long-term investor, I just take advantage of the long-term trend, hopefully upwards in the right direction, of the global stock market. And secondly, it's just making sure that I then don't make any decisions about whether I think personally, or in my opinion, if the market is too high or too low. I think that's such a dangerous game to play, and for many reasons. Well, firstly, the moment you start playing it once, let's say you get it right, for example, let's say you do keep everything in cash and there's a market crash in the next 6 months, and then you deploy your cash at some point in those next 6 months. After that, then what do? Are you then waiting every single month and saving up your money for another crash? Because the moment you start doing that, you have to get things right multiple times. You have to get every single purchase right. You have to get every single sale right. And there is no investor on planet Earth that can do that. But many, many people will think they do. And I'm grateful for them really for creating the market that we have today. But anyway, just as a reminder for everyone that you cannot know what things are going to go on in the market. And for sure, things could pull back, but it won't affect or change the way I invest any single way at all. Now, in terms of how the portfolio is constructed, many of you will be familiar with this one. I've called this one Toby's World, and it's effectively a global stock market portfolio broken out into 5 different ETFs. Now, I do share this portfolio as well. You're welcome to kind of have a look at it yourself. I do keep the links in the description below. Make sure you check that one out. And also, if you do want to get yourself started with InvestEngine and actually open up a stocks and shares ISA or a self-invested personal pension, or If you also want to set yourself up with a business account, please make sure you check the links below as well. There is a bonus for you as a new customer if you do open an account through my link. Make sure you please do check all the terms and conditions as well, but I will leave those links in the description below. Now, as I was saying, my portfolio is fairly straightforward. Well, it's complicated in some ways because really you don't necessarily have to do 5 different ETFs to get a global portfolio. You can just stick with one. This really was a bit of experiment for me to almost see how low I could keep my costs. Now, by breaking up the world into these different areas, for example, the S&P 500 to represent the US, developed Europe to represent Europe, the emerging markets, Japan, and then the FTSE 100 to kind of be my UK kind of exposure, it really means that I can keep my costs very, very low. Now, if I have a look up here and press more in this tab here, you can see that my total expense ratio here, which is TER, is 0.09%, which is extremely low from an investment perspective. There'll be very, very few funds out there, very, very few ETFs that will have an expense ratio this low. And this means that for every £10,000, that's what £9 will be my fee as my total expense ratio based on these ETFs. Now, why don't we just have a look here just in terms of the last month to see how things have changed. And actually, if I do click here for the last month returns, I can see how each individual ETF has done. There'll be no surprise here that America and the S&P 500 has just continued to rally. So that's another 3.77% here. You can see returns for VUAG on the S&P 500, which is just astonishing, really. Europe has lagged behind slightly. Emerging markets, though, finally making a little bit of a comeback here, as you can see, up nearly 3%. The Japanese market, which was on a tear and then kind of didn't do much for a small period of time, is back up again. And the FTSE 100, unfortunately, is slightly down. Now, as we've got a new government in place, things are going to be fairly uncertain for a while. So who knows what's going to happen with things going on there. But the most important thing to say, I guess, really is have a look here at the weightings. Now, fortunately enough, the largest weightings of the global stock market and in my portfolio is in US stocks, and it'll probably be very much the same in yours. And because that's gone up 3.77%, that's nearly £1,000 there in terms of returns for the last month in the S&P 500, which is quite nice to see. Now, as I do also mention, all of these things are just on paper gains. And although it's psychologically nice to look at these things, I honestly couldn't care less if it was green or red. As a long-term investor, really selfishly, I would prefer to buy at lower prices and hope the market has a little bit of a correction and a dip to allow me to get more money in. At the end of the day, my investing strategy and the way I invest is not going to change no matter what. Just for reference, if you wanted to keep things simple for yourself, as I did mention, to have a simple global fund, I've got various portfolios in my account that you can have and copy if you want. I do share them and I will keep the links in the description below. One thing I'll point out here, and I've actually just called this one Index and Chill, like I have on the t-shirt here. And this actually just has a very simple fund. There's a couple of options here, but I have actually changed this one for FWRG. It's an Invesco FTSE All World Fund. It's super cheap. It's got 0.15% expense ratio. There is also another very, very popular Vanguard fund, which is the Vanguard FTSE All World Fund, which many of you can look at as well, which is VWRL or VWRP for the accumulation version. Just briefly before I go on to the SIP and just cover that one as well, and before we wrap things up for this portfolio update, one thing I wanted to show is I don't think I really often cover how to use the InvestEngine platform, but once you have set yourself up an account, it's really, really easy to what you actually need to do next, because many people might think, okay, well, how do I actually get started investing? So once you have an ISA set up and your account set up, what you actually need to do is click on this button here, which is add a portfolio. So you choose where you want the portfolio to be in. So in this case, it might be an ISA. Now, there's two options here. You can have a managed portfolio that InvestEngine can manage for you. So they will choose the investments based on the answers that you give to them. There is a fee for this way of investing, but you're very welcome to go down that and have a look down that route. Now, the way I do things is do it yourself. So I'll pick do it yourself from this perspective. This allows you to then choose your own investments, how you want to invest. So what you'll then do is you'll be adding in the different ETFs into that portfolio, and then you'll be choosing the weights or the percentages that you want that portfolio to look at. So for example, let's click on, I'll make a simple 2-fund portfolio, even though this wouldn't necessarily be the way I'll do things, but let me just do 2 for this example. So I'll say, okay, add VWRP to portfolio. That's great. And then I'm going to get another one as well. Now, this is definitely not something that you want to do. You wouldn't want to add 2 different global portfolios. It makes no sense, to be honest, but you could do this if you really wanted to. So I'll do FWRG here, add this one to the portfolio. I'm now going to review this. And once you've got the ETFs that you want in your portfolio, you can then choose what I just remember what he said was the weights. Now, the weights are just the percentages out of 100% that of every £100, say, that you put into this portfolio is how it would get invested. So for example, £50 here would go to VWRP and £50 would go to the Invesco fund, FWRG. And if you're happy with that, or you want to put 3 funds, 4 funds, 5 funds, however you like, that's completely up to you. I would then go to review and continue. And you can have a look now at what that looks like, which is actually a very nice useful feature on the InvestEngine platform. You can go to save and continue, and then what you could do, I won't do this one on my one, you save and continue, and then you can actually rename that portfolio whatever you like. As you can see, I've given all my portfolios names so I can kind of remember them. Most don't have any money in, and that's another key thing to remember, I should say. You can have as many portfolios as you like inside your account. You don't have to put money into each one. For example, there is even a cash position here as well. So you can have cash in an ISA without actually having to invest it as well. So that's also completely up to you. Now, quickly moving on, I'll have a look now just briefly into my SIP. Now, don't forget InvestEngine offer self-invested personal pensions. My SIP, as you can see, is up 11.5%, which is quite nice. You know, it's a very small amount of money in the long run, but it's nice to see that psychologically going up. As you can see, one key thing here, remember with a self-invested personal pension, you will get a top-up from the government, or a tax rebate, I should say, as you put money in. Now, as you can see on screen here, I first made my first contribution here back on the 1st of February, and I got my first rebate on the 19th of April. And those rebates have been continuing to come through, as you can see here, if I just go through there, for every single contribution. So they will come through every few weeks, I guess. It's about 12 weeks for the thing to come through. But don't bank on the exact time that rebate comes through, but you can see that one comes through there. Now, that is effectively a 20% gross or a 25% top up would be the best way to describe it. So £200 investment will get you a £50 rebate effectively into your self-invested personal pension. Now, in terms of what I invest in my pension, I keep this one so simple. VWRP, a single global index fund. Really, I could pick any global index fund here or pick whatever I want. And the reason I've done this is just to keep things so simple. My ISA is one I like to play a little bit around more with and have as a bit more of a thing where I can tinker with in terms of almost a bit of a game of how cheap I can have it. My pension, I almost just don't want to look at it at all and just leave it there. This really is about as robotic and automated as I want my investing to be. And that's my self-invested personal pension. I do need to do a lot more videos on the topic of both pensions, which you'll invest in at work, and self-invested personal pensions. So I know I've promised a lot of people to get those ones done. They are a bit more complicated to make, so I really want to go into a lot of detail and make sure I give all the right information as well, because this is probably, I would say, one of the most complicated and most misunderstood parts about personal finance. Because in my view, as a non-financial advisor and someone who just wants to share their ideas here on YouTube, I think if you can understand pensions and understand how those work, I think you're going to be way ahead of most people in the country, and you'll be in a very, very good financial position if you're able to understand what a pension is and what it can do for you, because there's a huge number of benefits that we should go through. Anyway, this wraps things up for this month's portfolio update. Thanks so much for watching as always. I'll see you in the next video. As always, happy investing.